Hello. Yes. Hello. Yes. Very, very good evening, everyone. How are you all? Everyone fine? Super. Is the voice audible or not? First, let me know that audio, video, everything is fine or not. Then we'll start our today's class. Everything is fine. Audio is there. Someone mentioned no audio. Why? I think the everything is fine. Okay. Now, so today we are going to start a new chapter, that is business combination Ind AS 103. Business combination Ind AS 103. Very important chapter from examination point of view. Normally we say that either a question will come from business combination or consolidated financial statement. However, business combination and consolidation are totally linked. I will say the consolidation chapter, the starting point is business combination only. Because normally in consolidation chapter, what happened? The parent company acquire control over subsidiary company, and on the date of acquisition, Ind AS 103 will be applicable. On the date of acquisition, Ind AS 103 applicable. Okay, it means the business combination chapter and consolidation started. Correct. The first will do business combination revision. Then of course in the part number 4 we'll take consolidation chapter. Okay, understood. But before I start, I just want to ask you the area where you find difficulty in business combination. So what will happen? I will give more importance to that particular point, because normally what happens, business combination chapter is very, very easy, and sometimes we think that you are able to understand whatever I am saying, and with the flow I will just go on. So if you just inform me the area where you find difficulty in business combination, so I'll put some stress on that. So can you just help me out where you find difficulty in business combination chapter? Everyone, I'll just take your 2-3 minutes and then we'll start business combination chapter. Okay sir, just inform me the area where you find difficulty in business combination chapter. In the meantime, everyone committed me that you will write down test number 2 on Sunday, but trust me, I have received only 2-3 paper. Means once again, you actually have not done whatever you have committed. Many of you committed me that on Sunday you write on test number 2. I said okay, but I have not received. I have received only 2 3 paper. It shows that how much you are committed. It shows how much you are disciplined. Okay, I am saying only one thing to you, that if you are not consistent, if you are not disciplined, if you are not following what, if you are not doing the thing whatever required in a disciplined way, you will not be able to pass. That is pakka rule. This is the rule of CA examination. Okay, the full chapter. I will explain full chapter. I am asking the area where you find difficulty, so that I just give emphasis on that. Indemnification. Chalo, one point came about indemnification. Any other? Calculation of PC. Okay, very good. Other points? Quite comfortable with individual step, but when it's come to comprehensive question, it become a bit difficult to finish. It's difficult to finish because you do not have the writing practice. Okay, if you know the answer, you should complete it. There is some difficulty in writing practice. For that only I am saying write test, but you are not writing. In exam, what will happen? Same problem will arise. Then you came up, you will come after exam. After exam, you will come back and you will say, sir, I have only attempted 80 marks paper. Then what? Yesterday I wrote, sir, legal transfer, transferee, accounting transfer, transferee. What is this? Acha, legal. Oh, legal means you are saying about reverse acquisition. Okay. Then that's come under miscellaneous concept: reverse acquisition, common control, business combination, reverse acquisition, reverse acquisition. Okay, I understood. Reverse acquisition is a part where you are finding difficulty, and business combination under common control. Many of you said about reverse acquisition. Chalo, I will keep that point in my mind. Then somebody said about demerger. Demerger is a very easy. What is in that? Chalo, reverse acquisition means, I think all points. Everyone said all the points. Chalo. Now, business combination means what? Now, stop. I'll start the chapter. Can I start now? Now, what do you mean by business combination? Business combination is a transaction in which acquirer obtain control of the business of acquiring. Means acquirer obtain control of the business of acquiring. Now, what I have done, that already I have created a PDF for the revision purpose. This PDF you can download from my Telegram channel or WhatsApp channel. I think there is one uh, heading, handwritten notes. There are 3 chapters for which I have already created handwritten notes. One is consolidation, one is financial instrument, but financial instrument I have not used that. Financial instrument already I have done the revision from what the entire chapter, but you can revise the financial instrument chapter from there. Okay, then about consolidation also. So if you want, I can revise from this handwritten note, which will be easy to understand, which you will feel better with this. Okay, because of course I need to focus on what, exam point of view. Business combination, I'll focus from examination point of view. So can I revise from this what, handwritten notes? You can first download it from what, from where? From my Telegram channel, WhatsApp channel. Okay, means in the, in that, whatever I have forwarded, in that there is one heading, free method. It is handwritten notes. In that I have uploaded 3 chapters, which is written in my handwriting. One is business combination, one is finance instrument, and another is what, consolidation. If you allow me, I can revise from this. Okay. Now business combination whenever, so actually in business combination what happens, group of assets and liability are acquired. Group of assets and liability are acquired. Group of assets and liability acquired from whom? From acquiring company. Who is acquiring? Acquirer is acquiring. Okay. Now whenever group of assets and liability are acquired, now what Ind AS 103 says that either it may meet the definition of business or it may not meet the definition of business. Correct. Now if it meets the definition of business, then it is a business acquisition. If it does not meet the definition of business, then it is not a business acquisition, it becomes an asset acquisition. It becomes an asset acquisition. So for business acquisition, Ind AS 103 is applicable. So Ind AS 103 will be applicable for business acquisition in the books of acquirer. In the books of acquirer means Ind AS 103 is not applicable in the books of acquiring. It is only applicable in the books of acquirer. But whenever it is an asset acquisition, Ind AS 103 is not applicable. Ind AS 103 is not applicable. Now the question arises, whenever we acquire an asset, a group of assets from any entity which do not meet the definition of business, which Ind AS will be applicable? Just try to understand. For group acquisition, there is no specific Ind AS. Therefore, Ind AS 103 has given a guidance for the accounting treatment of asset acquisition. However, Ind AS 103 is not applicable. Ind AS 103 has given a guidance on asset acquisition. Got this point? So what Ind AS 103 says that, however, Ind AS 103 has given guidance for the accounting treatment. So what Ind AS 103 says in that, he will recognize all asset, we recognize all liability, whatever has been acquired, and to purchase consideration payable. So asset account debit, to liability account credit, to purchase consideration, it can be in the form of cash or whatever mode as per the information given the question. Now this consideration will be allocated to all assets. The consideration will be allocated to all assets in the ratio of their fair value. In the ratio of their fair value. So consideration will be allocated to identifiable asset in the ratio of their fair value. The fair value will be given. So what will do? All the consideration will be allocated to the identifiable asset in the ratio of their fair value. In the ratio of fair value. It means, can I say, in this case, will not recognize any goodwill, will not recognize any gain on bargain purchase. Got this point? This become asset acquisition. Very, very simple. I hope you have understood this point. Any doubt in this asset acquisition? No doubt in the asset acquisition. For that, we have one question. Let me come to that question. We have only one question in our ICS study matter. For that, this is the question number 2. What is given? An entity acquire an equipment and a patent in exchange for rupees 1000 crore cash and land. So entity acquired an equipment and patent in exchange of 1000 crore cash and land. The fair value land is 400 crore and the fair value of land is what? 400 crore and its carrying amount is 100 crore. The fair value of the equipment and the patent are estimated to be 500 crore and 1000 crore respectively. The equipment and patent relate to a product that has just recently begun commercialized. The market for the product is still developing. Assume that entity incurred no transaction cost. For ease of convenience, the tax consequences again have been ignored. How should the transaction be accounted for? Just try to understand, they have acquired two assets. One is equipment and patent from an entity in exchange of cash and land. In exchange of cash and land. So of course it is not a business acquisition, it is an asset acquisition because they have acquired only two assets. They have acquired only two assets. So how can we understand it is an asset acquisition, business acquisition? That part I will do at the end. Whether it is a business or whether it is not a business, how to analyze it, from that ICA is not asking a question, but of course I will do that, but at the end, at the end means how to identify whether the acquisition is business or acquisition is not a business. I will do that, but I will do that part at the end. Understood? Are you getting what I am saying? So in this case, what will be our journal entry? So can you see, we have acquired patent and we have acquired equipment in exchange of cash and land. So what is the fair value given? You can see the cash is 1000 and the fair value of land is how much? The fair value of land is 400 crore. 400 crore. Got this point? Then they have given the fair value of equipment and a patent is 500 and 1000 crore. Means patent is 1000, equipment is 500. Okay. It means patent is 1000 and equipment is 500. Are you able to understand this point? Correct. Now the question arises, first question arises in this case, of course it is not a business combination. It is not a business combination. So it become an asset acquisition. If it is an asset acquisition, then we need to find out purchase consideration. So what is the purchase consideration that we need to find out? Means what is the cost of acquisition this? So just try to understand what Ind AS 103 says that in this case the cost of acquisition means the purchase consideration will be as per the requirement of Ind AS 16. Means just try to understand it is nothing but acquisition of asset in non-monetary consideration and monetary consideration. So in that case, what is the cost price? The cost price will be equal to fair value of asset given up or fair value of asset received. So can you see in this case what is the fair value of asset given up? So fair value of asset given up is cash 1000 and 400. So this become purchase consideration. This become purchase consideration and this purchase consideration will be allocated to patent and equipment in this ratio. In this ratio, have you understood? So can you see we'll allocate 1400 in the ratio of 1500. Okay sir, so 1400 into 1000 divided by 1500, it become 933 minus 1400, it become 467. It means pattern will be now 933, equipment will be 467, equipment will be 467. Understood? Correct. Now cash paid is 1000. What is the carrying amount of land? The carrying amount of land is given 100 crore. The difference will be gain on sale of land. This is gain on exchange of land or sale of land, whatever you can say, that will be transferred to PL. So this become how much? 1400 minus what? 1100 is equal to 300. 300 become gain that will be transferred to PL. Have you understood this question? Only one question of this nature we have. Only one question of this nature we have in ICA study material. Have you understood? So in this case, we have applied two Ind AS actually. First, we have applied Ind AS 16 to find out a cost price of acquisition. The cost price of acquisition will be based on Ind AS 16, which says that cost price will be equal to fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. Correct. In that case, we have understood the purchase consideration 1400. Now 1400 will be allocated to patent equipment in the ratio of their fair value. In the ratio of their fair value. Understood this part? First part. However, this type of question till now not asked, but can be asked in multiple choice question. Can be asked in multiple choice question. Got this? Any doubt in this? Any doubt in this? Understood. Okay. Now let us come to the second point. This point you have understood. Correct? Yeah. Second point is what? Whenever there is a business combination, whenever there is a business combination, sorry, 1 minute, 1 minute. Hold on. And first part you understood. What is happening? Give me 1 minute. Now, chalo. The first part you understood. Now come to second part. So whenever there is a business combination, so under business combination, acquire, obtain, control of the business of acquire, control, acquire, obtain control of the business of acquiring. Now this control can be obtained in two ways. Now what is the meaning of control? Control has been defined under Ind AS 110. So the meaning of control, the revision will do under Ind AS 110 when I will do consolidation chapter. However, the meaning of control is not required for this particular chapter. Whatever you know, you will be able to understand under Ind AS 110 when I will do the consolidation chapter. Okay. Now the control is obtained two ways. In this chapter, control is obtained two ways, either by acquiring substantial equity shares of acquiring, either by acquiring substantial equity shares of acquiring. So substantial equity shares means normally it is more than 50%, but as per control definition, even though they acquire less than 50%, they may be de facto control, means they may be control. Now when it will be control in case of less than 50% acquisition, that will do under control definition in consolidation chapter. Okay sir. So by acquiring substantial equity of acquiring, from this chapter point of view, it is always more than 50% as per the institute question whatever they have given. Understood? So it is nothing but formation of subsidiary. It is nothing but formation of subsidiary. Correct? Now by acquiring business of acquiring, or it can be by acquiring business of acquiring, directly the business of acquiring. It can be either all business of acquiring, or it can be one or more, but not all business of acquiring. Means either by acquiring all business of acquiring, whenever they acquire all business of acquiring, there can be two form of business combination. One is known as amalgamation, one is known as absorption. चलेगा. Or by acquiring one or more but not all business of acquiring, then it will be either demerger or it can be purchase of business. But from purchase of business there is no question in ICS study material. Normally they are asking question from demerger. Understood? Means from examination point of view, there are four types of business combination. One is formation of subsidiary, second is amalgamation, third is absorption, and fourth is demerger. Fourth is demerger. Okay, understood? Yes, sir. All my free PDF are in my WhatsApp channel or Telegram channel. Every time you ask the same question, I don't understand. You are a CA final student or you are class 1 or class 2 student. Every time I said everything is given in a very detailed way in my WhatsApp channel or Telegram channel. Do join that. You'll get everything. Now every time so I will not inform you that this is there, this is there. Everything is there only. Understood? Yes, sir. So, can I say from examination point, there are four topics. One is either the question will be for formation of subsidiary, or the question will be of amalgamation, or the question will be of absorption, or the question will be of demerger. Up to this, any doubt? No doubt. Now, amalgamation, you know. I hope amalgamation, you know. Yes or no? So, when I say try to understand, when I say amalgamation, amalgamation means what? Two or more than two companies join together to form a new company. Whenever they give this type of question, suppose there is A limited, B limited, both company liquidated and join to form a new company. This is sorry. Sorry. This is known as what? Amalgamation. So in this case, you just try to understand. AB company acquire the business of A limited and B limited. So A and B limited are liquidated. So they are acquiring company, and AB become a new company that become acquirer company. Understood? Yes, sir. Now, in case of absorption, what happened? There is one company A Limited which will absorb one another existing company. Means A Limited will absorb B Limited. A Limited will absorb B Limited. So this is what another form of business combination. In this case, A Limited will become acquirer and B Limited will become acquiree. There is one more form, one is known as external reconstruction, but there is no question of external reconstruction in your ICS study matter. In that case, what happened? There will be one company A Limited which will be liquidated and their business will be taken over by a newly formed company. Their business will be taken by a newly formed company. So that is also business combination. In this case, A Limited will be liquidated and their business will be entirely taken over by a new company, B Limited, which will be acquirer. Understood? Then demerger. In case of demerger, what happened? Just try to understand. In case of demerger, there will be one demerged company, and a new company will form to take over one or more business, but not all business of demerged company. Correct? This company will be newly formed company, that is known as resultant company in what layman language. So this is a demerged company, correct, which will transfer one or more but not all business to a newly formed company, that is a resultant company. So of course, in this case this new company will become acquirer and this existing company, demerged company, will be acquiring, and in this case PC is not paid, PC is not discharged to the demerged company. In this case, PC is discharged to the shareholders of demerged company. So PC is paid to whom? To the shareholders of demerged company. This is known as demerger. Understood? So what is demerger? You understood? So in case of demerger, the demerged company will transfer one or more but not all business to what? The resultant company. Resultant company will be a newly formed company, and resultant company will discharge PC not to the demerged company, they will discharge PC to the shareholders of demerged company, and therefore after demerger the shareholders of demerged company will also become the shareholders of resultant company without any investment. Chalega? Yes sir, correct. Then there is one more type of question which is known as purchase of business. Purchase of business means what? There will be one company X, there will be one company Y. You can see X will have two business 1 and business 2. If suppose business 2 is sold to Y, business 2 is sold to Y, so Y is acquiring business 2 from X, and PC is paid directly to X. So in this case, PC is paid directly to X. So of course, it is not demerger. In case of demerger, what happened? PC is paid by resultant company to the shareholders of demerged company. But whenever PC is paid by this acquirer directly to acquiree, then it is known as purchase and sale of business. It is purchase and sale of business, but there is no question in ICS study matter regarding this. Correct. The last one is formation of subsidiary company. You all know about formation of subsidiary company. There will be one company, parent company. There will be another company, subsidiary company, and parent company acquires equity shares of subsidiary company to obtain control. Understood? Have you understood? Got this point? Correct. So Ind AS 103 will be applicable in consolidated financial statement of parent company. Ind AS 103 will be applicable in consolidated financial statement of parent company on the date of acquisition. Up to this, any doubt? So have you understood? From examination point, there are only 4 types of question: formation of subsidiary, amalgamation, absorption, and demerger. Up to this, any doubt? This I am teaching totally from examination point of view. Okay, because abhi right now if I'll teach detail, now you will be confused. So I'm not going into detail. Totally focus on exam point of view. Up to this, any doubt? One page I will do. I will ask you doubt. Once you have understood, I will just go to next point. Understood or not? Reply. I'm waiting for your reply. Okay. Now, accounting method. Right now we are doing business combination. Now for accounting purpose, there are 2 type of business combination. One is business combination. Under common control, and one is business combination not under common control. Just try to understand, when I say business combination, it will be always business combination not under common control. So when I am saying business combination, it means it is business combination not under common control. And for business combination not under common control, Ind AS 103 applies. Ind AS 103 is applicable, and Ind AS 103 has given acquisition method for the accounting treatment in the books of acquirer for business combination not under common control. But whenever there is a business combination under common control, then Ind AS 103 is not applicable. For that we have Appendix C to Ind AS 103. For that we have Appendix C to Ind AS 103, and Appendix C to 103 has given pooling of interest method, understood? Correct. Got this point? So first we'll focus on business combination which is not under common control. Now what is the meaning of business combination under common control? I will discuss in the later part. Understood? So business combination not under acquisition method has been given. Now this acquisition means business combination not under common control can be of two types. Either it will be a simple acquisition or reverse acquisition. Now simple acquisition means legal acquirer and accounting acquirer are same. Legal acquirer and accounting acquirer are same. Understood? So it can be as a simple acquisition. However, simple acquisition, this name is not given under Ind AS 103. Only from your understanding point of view, of course it is not a reverse acquisition, so we call it simple acquisition. Okay, or you can say it is not a reverse acquisition. So whenever legal acquirer and accounting acquirer are same, it is simple acquisition. But whenever legal acquirer and accounting acquirer are different, whenever legal acquirer and accounting acquirer different, we call it reverse acquisition. It means we need to understand what will be the accounting treatment यहाँ पर, what will be the special accounting treatment in case of reverse acquisition. Understood? Now sir, how can we understand it is a reverse acquisition? How can we understand it is a reverse acquisition? That we need to understand. Correct? Now before I go to simple acquisition, of course I will first start simple acquisition method. But what Ind AS 103 says, try to understand what Ind AS 103 says, that whenever you are applying acquisition method, correct? So there are how many steps? 6 steps. Step 1, step 2, step 3, step 4, step 5, step 6. But how many steps are there? Step 1, step 2, step. Arey sir, give me what are in step 1? Step 1 means what? Is audio visible? Audio is audible, not visible. Video is visible. Is audio audible? What is your question? Audio is good or not? Any problem in audio? All is okay. Someone will come in between and disturb me. Huh? वाह रे वाह 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 वाह, मजा आ रहा है. Audio is good ना? चलो. What is step number 1? Identify accounting acquirer. The first step is only accounting acquirer. Now in this chapter, acquirer means accounting acquirer, not legal acquirer. So in this chapter, acquirer means accounting acquirer, not legal acquirer. Got this point? Are you able to understand? So Ind AS 103 is applicable in the books of accounting acquirer or legal acquirer? You will say me. Ind AS 103 is applicable in the books of accounting acquirer or legal acquirer? Ind AS 103 is applicable in the books of accounting acquirer or legal acquirer? This question I am asking from you. Very good. So Ind AS 103 is applicable in the books of accounting acquirer, not in the books of legal acquirer. Correct? So first we need to identify accounting acquirer. So if accounting acquirer and legal acquirer are same, then it is simple acquisition. But sometimes accounting acquirer and legal acquirer may be different, then it is a reverse acquisition. The first step I will explain. Then determine the date of acquisition. Date of acquisition is the date when the control is obtained. From examination point of view, that date will be always given in the question. So it is not a point of difficulty. Then determine fair value of consideration paid or transfer. This we need to calculate. Means in this chapter we need to calculate purchase consideration. This we call purchase consideration. Now what is included, what is not included in PC, that we need to understand. Then recognition and measurement of INA. INA means what? Identifiable net asset of acquiring. That will be also given. Fair value will be given the question. Means step number 4 is also not so much relevant. However, there are some small points which need to be taken care. That we'll discuss. Recognition and measurement of INA of acquiring. Then step number 5, measurement of NCI. Measurement of NCI, non-controlling interest. Can I say this point will be applicable only in case of formation of subsidiary? Formation of subsidiary means we need to find out NCI. NCI means what? Any equity which is not acquired by parent company. Means if suppose parent company has acquired 70% equity shares of subsidiary company, 30% become what? Non-controlling interest. Non-controlling interest. So how to measure it, that we need to understand. Yes sir. Then recognition, measurement, goodwill, or gain on bargain purchase. This is the last step of this chapter. This is the last step of this chapter. What is the first step? Identify the accounting acquirer. Why these steps are important? Because sometimes what happen in question may be asked, we discuss with the requirement of Ind AS 103. Then you discuss step 1, step 2, step 3 like this. Okay. So step number 1 is what? Identify the accounting acquirer. Step number 2 is what? Determine the date of acquisition. Step number 3 is what? Determine the PC. Step number 4 is what? Recognize and measure the fair value of INA of acquiring company. Then measurement of NCI. And the last step is goodwill or gain or bargain purchase calculation. Okay sir? Yes sir. Now first step, identification of accounting acquirer. Let me discuss this only so that you can understand when it will be a reverse acquisition, when it will not be a reverse acquisition. Correct? So accounting acquirer is the entity that obtain control over the business of acquiring. The accounting acquirer is the entity which obtain control over the business of acquiring. Now just try to understand. Sometime what happen? Normally what happen? A big company will acquire a small company. So big company acquires small company. Can I say? Of course it is correct. And in this case, big company will be legal acquirer as well as what? As well as what? Accounting acquirer. But sometimes what happen? Big company want to acquire small company. Let's just try to understand. Suppose there is a big company and there is a small company. Big company means profit making and a small company may be loss making. Now big company want to acquire small company. Why big company want to acquire small company? Because small company has a losses, and this can be a tax losses which can be set up with the profit of big company, and then they will get some tax relief. So that is the real interest of big company to acquire small company. But as per Income Tax Act, if big company acquires small company, then it is quite possible this loss cannot be set off. Therefore they will draw a mechanism. In that mechanism, what they will do is small company will acquire big company. Now just try to understand from Income Tax Act point of view, small company acquire big company. So of course the loss of a small company become the loss of a small company only, and then whatever profit had in future, that can be set up with that loss. So it means it is a mechanism. But a small company acquire big company, just try to understand what is the substance of this contract. This mechanism is only for the tax set off. But in this case, who will get control? The shareholders of big company will get control over the business of small company. Means even though small company is a legal acquirer, but in this case big company will be accounting acquirer. So this is known as what? Reverse acquisition. So how to identify whether it is a reverse acquisition, it is not a reverse acquisition? For that purpose, Ind AS 103 has given some guidance. Now this guidance, I don't know whether it is important, not important from examination point of view, but guidance is guidance. We need to understand. Correct. So what they want to say, if the acquisition is through payment of cash or transfer of any other asset, then no problem. The entity who is paying cash, entity who is transferring the asset will be accounting acquirer. Correct. So accounting acquirer is the entity who transfer the cash or any other asset. But whenever payment means acquisition is through issue of equity instrument, then doubt will come. So for that they have given some indicator. These are the indicator which imply that accounting acquirer may be different from legal acquirer. Got this point? Yes, sir. So if acquisition is through issue of equity instrument, what they want to say, entity whose owner, entity whose owner receive the largest portion, entity whose owner receive the largest portion of voting right in the combined entity will be accounting acquirer. Understood? So we need to find out, we need to find out the we need to find out the percentage of voting right after business combination, and we need to find out entity whose owner receive largest portion of voting right. Entity whose owner receive largest portion of voting right will become the accounting acquirer. Understood? Normally in all of the question, normally I will say in all of the question we apply first indicator only. Means from examination point of view, first indicator is very important, because other indicator depends upon the information given the question. Other indicator depends upon the information given the question. So whenever the question is silent, always will apply first indicator, always will apply first indicator. Are you able to follow me? Are you able to follow me? Yes, sir. I will take one example, nothing to worry about that. Okay, first let me read. Then second is what? Entity whose single owner, entity whose single owner or organized group of owner hold the largest minority voting right, largest minority voting interest in the combined entity. Means one single owner or group of organized owner hold the largest minority voting right may indicate that that entity might be what? Might be, I am saying, accounting acquirer. Then entity whose owner has the power to compose the governing body of combined entity. Power to compose. Power to compose means power to appoint the directors, power to terminate the director. So in any case, can I say director will take all the decision? So if they have power to compose the governing body of combined entity, that entity become what? Accounting acquirer. Entity whose previous management dominate the management of combined entity. Of course, entity that pays premium over the pre-combination fair value of equity interest of other combining entity. Means if I am paying premium over your value, suppose your value is 10,000 crore, but I am paying 12,000 crore. Of course, whatever premium paying, that is for the acquisition of control only. Got this point? So that indicate the entity whoever is paying premium will be the accounting acquirer. Entity whose relative size means net worth is greater than other combining entity indicate that that entity will be accounting acquirer. Understood? However, the first indicator is important from examination point of view. Let me take some example. Suppose example, share capital of A Limited is 20,000 equity shares. Share capital of B Limited is 10,000 equity shares or rupees 10 each. And I have given four different cases. Four different cases. How many cases I have given? Four different cases I have given to explain whether it is an accounting, whether it is a reverse acquisition or whether it is a simple acquisition. First, A Limited absorbed B Limited and has agreed to allot one equity shares of A Limited for every two equity shares in B Limited to the equity shareholders of B Limited. To the equity shareholders of B Limited. In this case, I have already have the answer, so I will explain with that. Okay, can I explain with that? Bolo. Now, example number one, case number one is a case of absorption because A Limited absorb B Limited. Now, in this case, first we'll find out how many shares will be issued by the legal acquirer to the legal acquiring. Means number of shares issued by A Limited to the owner of B Limited. A Limited to the owner of B Limited. So number of equity shares issued to the owner of B Limited. Can you swap ratio is given 1 by 2, and number of shares is 10,000. So we'll do 10,000 into 1 by 2. We'll do 10,000 into 1 by 2. Got this point? 10,000 into 1 by 2. It means 5,000 equity shares is issued to the owner of B Limited. 5,000 equity shares has been issued to the owner of B Limited. And number of shares already held by the owner of A Limited, already held by the owner of A Limited, it is given the question, that is 20,000. Means what is the combined number of shares in the combined entity after business combination is 25,000. If we find out the percentage of voting right, so for the owner of B Limited it is 20%, for the owner of A Limited is 80%. So can you say in this case the owner of A Limited has the largest voting right in the combined entity. Therefore, A Limited is the accounting acquirer as well as legal acquirer. Therefore, A Limited is what? Accounting acquirer, and it is not a case of reverse acquisition. It is not a case of reverse acquisition. Understood? Have you understood example number one? Example number one, you understood? Everyone. Yes, sir. Very good. Now coming to example number two, A Limited absorbed B Limited and has agreed to allot 3 equity shares of A Limited for every 1 equity share. Now the swap ratio has been changed. Now it is 3:1. For 1, they will get 3. Understood? So in this case, what is the? It is also a case of absorption. Now first we'll find out number of shares issued by A Limited to the owner of B Limited. It will be 10,000 into 3 by 1 means 30,000. Means 30,000 now. And number of shares already held by A Limited 20,000, total become 50,000. Now you can see it becomes 60% and 40%. It means now the owner of B Limited has the largest voting right in the combined entity. Therefore, it indicates that B Limited is an accounting acquirer and A Limited is a legal acquirer. Therefore, it become a case of reverse acquisition. Therefore, it become a case of reverse acquisition. Understood? Have you understood case number two? Have you understood case number two? In case of absorption, we find out in this way. In case of absorption, so whenever it is an absorption, first find out how many shares issued by legal acquirer to the legal acquirer. Then how many shares already held by the owner of legal acquirer. Find out total, find out percentage of voting right. Then find out which entity has the largest voting right in the combined entity. Understood? Now I will take two examples of amalgamation. Amalgamation is two companies joined together to form a new company. So just try to understand in the case number C, what is given? C Limited was formed to take over A Limited and B Limited, and C Limited agreed to allot equity share to the owner of A Limited in the ratio 3:2 and owner of B Limited in the ratio 1:2. Now try to understand whatever I am saying. Try to understand whatever I am saying. Whenever it is a case of amalgamation. See, an amalgamation, what actually happened? A Limited, B Limited joined together to form a new company, that is C Limited. Now C Limited become what? Legal acquirer. A Limited and B Limited legal acquirer. You only say whether new company can acquire anyone. Just try to a new company which is born today only, whether it has a power, whether it has a ability to acquire any company. No, it means it is what? Always a case of reverse acquisition. In this case, either A will acquire B or B will acquire A. C is only a vehicle. C is only a vehicle to initiate this business combination. C is only a vehicle to initiate this business combination. But from my point of view, from this particular case point of view, A will either acquire B or B will acquire A. It means it is always a reverse acquisition. Means this type of question, amalgamation, it cannot be a simple acquisition. It will be always a reverse acquisition. Understood this point? Now you need to find out of A and B, out of A and B, which is which is accounting acquirer and which is accounting acquiring. Got this point? Yes, sir. Correct. So in this first, you need to find a number of equity shares issued by C to the owner of A, to the owner of A. That is 20,000 into 3 by 2 given. So it becomes 30,000. It becomes 30,000. Understood? And number of equity shares issued by C to the owner of B, that is 10,000 into 1 by 2, 1 by 2 swap ratio given, that is 5,000. Total become 35,000. It become 86%. It become 14%. So it is understood that entity, the owner of A Limited, has the largest voting right in C Limited, and therefore A will obtain control over B, and therefore A will be accounting acquirer and B will be accounting acquirer. It is always a case of reverse acquisition. Understood this point? So A become accounting acquirer, B become accounting acquirer, and C is nothing. C is only legal acquirer. Correct now? So C is nothing. Accounting acquirer A, accounting acquirer B, and C is nothing. C is only legal acquirer. We are not supposed to identify legal acquirer for accounting purpose. Means A is accounting acquirer, B is accounting acquirer. Complete. Have you understood this part? Bolo. Have you understood this part? So can you say amalgamation will be always reverse acquisition? Absorption can be reverse acquisition or it can be simple acquisition. So be careful in exam. Whenever a question of amalgamation, it will be always reverse acquisition. Whenever a question of amalgamation, it will be always reverse acquisition. Absorption can be reverse, absorption can be simple. Am I right or not? But in one situation, amalgamation can be also simple acquisition. Be careful. Correct? But that type of question has not been given in ICS study material. But try to understand whatever I am saying. If I say point number 4, C Limited was formed to acquire A and B Limited and consideration paid in cash. Means C has paid consideration in cash to A and B. Means it is quite possible C is funded by some venture capitalist. C is funded by some venture capitalist. Quite possible or not? Are you able to understand? So C has paid PC in cash. Whenever payment is done in the form of cash, the entity whoever is paying cash will be the accounting acquirer. So in this case, C will be accounting acquirer and A and B will be accounting acquiring. But this type of question has not been given in ICI study material. Understood? चलेगा. Step number 2 understood? Step number 2 understood? Any doubt? Chalo. Now step number 1 you have understood. Step number 2 is determination of PC. Sorry, determination of date of acquisition. So determination of date of acquisition very simple from examination point of view. They will always give you the date when the control is obtained. Whenever the control is obtained, that becomes the date of acquisition. That will be always given in the question. So this is not at all relevant from examination point of view. I think you can understand. Now determination of PC. Coming to determination of PC. So whenever I say determination of PC, purchase consideration. So purchase consideration means what? First we need to find out fair value of consideration paid, or I will come to that my PDF only. Now concept number 1, come to this, because if I'll do details now you will be confused. I'll go from, you only say, I'll go from my handwritten notes point of view, or I'll go as per India Saaransh book. What do you want? Because India Saaransh book, when I will take now, it will be covering all the points. So you want to focus only on examination point of view. This has been discussed from questions point of view. The handwritten notes has been discussed from questions point of view, and India Saaransh book has been discussed from what concept point of view. So what do you want? Because I mean, sometime I will go there, sometime I will be here, so you will be also confused. Both, sir. Very good. So both, sir, is very good option. He, sir, who is this both, sir? Is Sravanan? Na, I like you. I like you. I started liking you. You are always diplomatic, sir. Both, sir. Sir, give us both. So what I'll do first, I'll go as per handwritten notes. Then I'll come back at the end to India Saran's book to inform you that all points are covered. To inform you that all points are covered. Okay, sir. That will be okay, na. So first I will go for what? Are you getting what I am saying? Examination point of view. Okay, that is more relevant. I also suggest more relevant. Right now, going to the concept, you will be confused. So let us understand what to do, what not to do from examination point of view. Chalega? Can I do? Now, concept number 1 is what? Acquisition method. That is not a reverse acquisition. It is not a reverse acquisition. It is not a reverse acquisition. Okay. Now, normally, I have seen concept number 1. They ask a question of formation of subsidiary. Normally, it will be a question of formation of subsidiary. Correct? Means it is not a reverse acquisition. And just try to understand, whenever parent company obtain control over subsidiary company, it cannot be a reverse acquisition. It cannot be a reverse acquisition. Got this point? Correct? So in this case, first step number 1 is what? Calculation of PC. Step number one is what? Calculation of PC. How to calculate PC? So PC means what? Cash payment. That will be given the question. Cash payment, that will be given the question. Then fair value of equity shares issued. Now fair value of equity shares issued means what? Number of equity shares issued multiply by fair value of equity shares of acquirer. So number of equity shares issued or multiply by fair value of equity share of acquirer company. Acquirer company. Okay. Yes, sir. Sometime what happens, they will not give a number of equity shares issued. Then in that case, you need to find out what is the number of equity shares issued. For that, it is quite possible they may give you swap ratio. Then it will be number of equity shares acquired or number of equity shares of acquiring company multiply by swap ratio. So number of equity shares of acquiring company multiply by swap ratio. That will be fair value of equity shares issued. Then fair value of deferred consideration. There can be sometimes deferred consideration. Deferred consideration means what? Payment which will be done after the date of acquisition, after 1 year, after 2 years. So that will be measured at present value. Present value for that rate, for that discount rate will be given the question. So fair value of deferred consideration will be measured at present value. That can be easily calculated. Okay. Now there can be some contingent consideration. Contingent consideration means any consideration which is payable, any consideration which is payable on happening or on happening of uncertain future event. On happening of uncertain future event means there will be some target. If the target is achieved, then that consideration is payable. That consideration is payable. So that is always measured at fair value on the date of acquisition. Fair value on the date of acquisition. So fair value of contingent consideration on the date of acquisition will be given the question. Will be given the question. If not given, then what to do? I will explain. Okay, sir. Have you understood? Then we need to also include fair value of replaced share-based payment award. Fair value of replaced share-based payment award. Fair value of replaced share-based payment award. Now it is quite possible you have acquired a company and that company might have some share-based payment plan for their employee. So of course now, because if you have acquired that company, you need to replace the SBP plan of acquiring company with your SBP plan So in that case, what Ind AS 103 says that the fair value of SBP award replace has two parts. One, what is related to pre-combination period, another what is related to post-combination period. Because for pre-combination period, services was provided to the acquiring company, therefore that is a part of PC. But for post-combination period, employee will provide services to acquire company, therefore that will not be a part of PC. Understood what I am saying? So fair value replace SBP award. So we'll just find out how much amount is attributable how much amount is attributable to pre-combination period. How much amount is attributable to pre-combination period? For that we have one formula. What is the formula? Fair value of original award. That will be given the question. Original award means fair value of award of acquiring company. That will be given the question. Multiply by expired vesting period. That will be also given in the question. Divided by replace vesting period or original vesting period, whichever is greater. Replace vesting period means vesting period of replace award. Original award vesting period means vesting period of original award of acquiring company. Both will be given the question. Will take the greater one. So what is the formula? The amount attributable to pre-combination period will be added to the PC, and the formula is what? Fair value of original award multiplied by expired vesting period divided by replaced vesting period or original vesting period, whichever is greater. Understood? This will become what? Purchase consideration. This will become purchase consideration. Have you understood this part? Only this much, not beyond this. In exam, it will not be beyond this. Have you understood this part? Whatever point you are not understanding, just write down yes sir, not understood. Correct now. Then I will explain that point somewhat more also. Bolo. Very good. So can I repeat once again the PC, how it is calculated? First we'll take cash payment, then fair value of equity shares issued. Fair value of equity shares issued is equal to number of shares issued multiplied by the fair value of shares of acquired company. Number of shares issued is equal to number of shares of acquiring company multiplied by swap ratio. Then fair value of deferred consideration. For that we'll measure the fair value of deferred consideration by using present value technique. Then fair value of contingent consideration. Contingent consideration fair value will be given on the date of acquisition. Then fair value replace SBP award. Fair value replace SBP award. Okay. So what is the formula? So fair value replace SBP award. So fair value replace SBP award will be divided in two parts: pre-combination period and post-combination period. Pre-combination period will be added to the amount of PC. The formula is what? Fair value of original award multiplied by expired period divided by replace vesting period or original vesting period, whichever is greater. Whichever is greater. Okay. चलेगा? Understood? Sir, can you please take example of? I will take one big question only. I will take one question. Not, don't worry. Acha, you are asking why it is greater. Right now, don't go into that, because if I'll explain that, it will take more time. Try to understand. It will be always greater. It will be always greater. I don't want to focus on that right now. Are you able to understand? It will be replace vesting period or original vesting period, whichever is greater. Just try to understand. Try to understand this way. Suppose original means original award vesting period is 5 and replace award the vesting period is 4 and already 2 year has been expired. Already 2 year has been expired. Are you getting what I am saying? Already 2 year has been expired. So what we'll do? We'll do 2 by 5. We'll do 2 by 5. This you understood why we'll do 2 by 5? Because we'll do multiply by expired vesting period divided by 4 or 5, whichever is greater. 4 or 5, whichever is greater. Because out of 5 for 2 years, the employee of acquiring company has given services to acquiring company. Understood? Have you understood? So this is to very simple. I think in this no doubt. I think in this no doubt ना. अरे बोलना रे. Correct. But if I say in this way, replace vesting period is 5 and this is 4 and this is 2, then we'll do 2 by 5, means I will take now replace our 2 by 5. It is as simple as if you have done modification in case of share based payment. Let me explain, because you have asked the question. So I don't want to delay this, otherwise you will think sir ko pata nahi hai. Okay, you have done modification. Now whenever vesting period increases, it is favorable. We have done modification in share based payment. Whenever, just try to understand whatever I am saying. Are you able to understand? Whenever vesting period increases, it is favorable for employee, beneficial for employee. It is not beneficial for employee. Right now you are asking the question. I will try to understand concept first. I'll come to the question. Then you say how to find out. Question is asking deferred consideration or contingent consideration. How can I say right now? It is depend upon the information given the question ना. अरे भाई ये क्या सवाल हुआ? Why you are saying like this? हाँ? I mean, I mean, right now, just try to understand. You have understood this now. It will take a lot of time. Okay. So what I am saying, everyone, what is the formula? Formula is what? Fair value of original award multiply by what? Expired period divided by what? Replace vesting period or what? Original vesting period, whichever is greater. Formula you understood? Formula have you understood? I forget about this. I will not go into that. Have you understood the formula? Any doubting formula? Means suppose fair value of replace award is 600 lakhs. Fair value of original award is 500 lakhs. An expired period is 2 years. Replace vesting period is 4 years. And original vesting period is 5 years. Then what will be the amount included in PC? You only say. What will be the amount included in PC? What will be the amount included in PC? What will be the amount included in PC? 200 is included in PC. Means out of 600, 200 is already included in PC and 400, the balance 400 means we'll do 600 minus 200, that will be recognized as EB expense in the books of parent company for post combination period. So can you say because the replaced vesting period was 4, out of that 2 is expired, so this will be charged as an EB expense as per the requirement of Ind AS 102. Just try to understand business combination. Ind AS 103, Ind AS 103 deals with only accounting treatment on the date of acquisition. Subsequent accounting will be done as per relevant Ind AS. Subsequent accounting will be based on relevant Ind AS. So just try to understand, if suppose they ask you balance sheet on the date of acquisition, this is not at all relevant. This is not at all relevant. Means this will be relevant only when they ask you about subsequent accounting. Otherwise this is not at all relevant. So quite possible this can be asked in multiple choice question. What about the post combination period expense? So this 400 will be recognized as an expense during post combination period. Understood? For 2 years. Correct? Understood this point? Now this become PC for business combination. PC for business combination. After that, what we do? There can be some separate transaction which is not a part of business combination transaction. So what Ind AS 103 say that adjustment is required in the amount of PC whatever you have calculated. So after that, what we'll do? Plus minus adjustment for separate transaction which is not a part of business combination transaction. But till now no question of this nature has been given in ICA study matrix question. Till now, whatever question has been given, here it is completed, means it is not yet adjusted with separate transaction which is not a part of business combination transaction. Correct? But there can be some transaction, and that transaction can be of two types. Either the transaction is due to some pre-existing relationship, or that can be due to some post combination arrangement. Due to some post combination arrangement. Are you able to understand? Correct? So can I say there can be some separate transaction which is not a part of business combination transaction, so that will be adjusted with the amount of PC whatever you have calculated. With the amount of PC whatever you have calculated. And so let me take one example. Let me take one example. Suppose A Limited and B Limited. Correct? Now A Limited has done one sales to B Limited before what? Before business combination. So can you say there will be some receivable and there will be some payable. Suppose receivable is 100 lakh and payable is also 100 lakh. Correct. Now A Limited absorb B Limited. A Limited absorb B Limited and PC agreed for business combination. PC agreed for business combination might be 1000 lakh. Might be 1000 lakh. So this 1000 lakh who will pay to whom? A will pay to the owner of B Limited. But what A will say, कि अभी right now what A will say, कि this 100 crore, this 100 is receivable or not. So what A will do? A will say will pay 1000 minus 100. 1000 minus 100. It means 900 is paid. So suppose the cash payment is 900. Cash payment is 900. Suppose cash is paid 900. So you only say PC for business combination is 1000 or 900. You only say PC for business combination is 1000 or 900. Bata. In this case, are you able to understand? So A may have agreed with B that this 100 lakh, whatever is receivable, will be adjusted with the amount of PC. Therefore, cash paid is 900 lakh. So from your point of view, PC is 1000 lakh or 900 lakh. It is 1000 lakh. No, but as per our formula, what is cash payment? 900. So why there is PC for business combination? No. So what will do? Plus receivable due to separate transaction which is not a part of business combination transaction 100, and PC for business combination will be 1000. PC for business combination will be 1000. Understood? Similarly, there can be some post combination arrangement. For example, A Limited, B Limited. A Limited agreed to absorb B Limited. A Limited agreed to absorb B Limited. And there is one director, Mr. B. There is one director, Mr. B, who is a professionally skilled person, and without this person, they cannot run the business of B Limited. So they will try to retain Mr. B. They will try to retain Mr. B. So what happened? A agreed to absorb B Limited and PC agreed 1000, but they have decided to pay Mr. B extra if he retain in the business for 5 years. If he retain in the business for 5 years, extra amount paid, and suppose 500 lakh was paid to Mr. B if he retain in the business for 5 years and total payment is 1500. My question to you all, in this case PC for business combination 1000 if 1500, cash paid is 1500. My question to you all, what is the PC for business combination? 1000 if 1500. Everyone, in this case also 1000. So what will do? Cash payment is 1500, but we'll do minus what will do? The amount paid for the post combination services, and that will be accounted as per Ind AS 19. 500 that deducted, and 1000 will be the PC for business combination. Understood? Till now this type of question has not been asked, and I am very much surprised why they don't ask this type of question. Should be asked in exam. So what will do? Add any receivable due to pre-combination contract, less any payable due to pre-combination contract, correct, less any payment due to post-combination services of employee, payment due to post-combination services of employee, less payment of any liquidation. If suppose A has agreed to pay liquidation expense of acquiring company, so whatever liquidation expense has been paid by A on behalf of B, that is not a part of that is not a part of PC, that is a separate transaction. You will deduct less payment of liquidation expense of acquiring company, that will be also deducted, and this will become PC for business combination. This will become PC for business combination. I hope this point you understood. I hope this point you understood. Any doubt? Any doubt? Correct. This liquidation expense, whatever amount has been paid, will be charged to PL account as an expense immediately. Will be charged to PL account of acquirer company as an expense immediately. Understood? And this will be accounted separately. Means this receivable will be settled, this payable will be settled, and this will be accounted as per the requirement of Ind AS 19 in the post combination service. Means this will be prepaid EV expense. This will be treated as prepaid EV expense if paid. Understood? Have you understood? Any doubt? Have you understood this much? Everyone, respond fast. This chapter is very much technical, but they are not asking technical questions. Correct now. Business combination, I will say, is one of the interesting chapter, but I say is not asking that type of question. If they start asking that type of question, a student will die in exam hall. Correct? But trust me, whatever question they are asking, they are very simple from examination point of view. Understood? Correct. Now coming to contingent consideration. Now contingent consideration, if there is come contingent consideration, how can we identify this is a deferred consideration, contingent consideration? Deferred consideration is the amount payable in future without any condition. Means there will be no condition. They will say 2 lakh will be paid after 2 years. That is deferred consideration. But if I say 2 lakh will be paid after 2 years, if profit will increase this much, if sales target will be achieved, if this, it means it become contingent consideration. So if there is some condition, that become contingent consideration. So of course you can easily identify it as deferred consideration or contingent consideration. So contingent consideration is measured at fair value on the date of acquisition. On the date of acquisition. Now contingent consideration can be either settled in cash or can be settled in the equity shares of acquired company. If it is settled in cash, can you say it will be classified as financial liability? Then it will be a financial liability. But if it is settled in equity shares and the settlement of equity shares is in the form of variable number equity shares, or it can be settlement in the form of equity shares, which is fixed number of equity shares. You only say if it is settled in variable number of equity shares of acquired company, it is liability or equity, then it will be initially classified as financial liability. That is as per the requirement of Ind AS 32, Ind AS 109 chapter. Understood? So if the settlement is done in the form of variable number of equity shares of acquired company, then initially it will be classified as financial liability. But fixed number of equity shares, then initially it will be initially what? Always it will be classified as equity. Understood? Have you understood this point? So whenever it is classified as financial liability, what Ind AS 103 say that subsequent measurement will be done at FBTPL. FBTPL means fair value through PL, means any increase or decrease in the fair value of that contingent consideration will be transferred to PL. Will be transferred to PL as a gain or loss. But whenever it is classified as equity, but the subsequent measurement gain and loss will be transferred to PL or OCI. Hello. Whenever it will be classified as equity, my question to you all, subsequent measurement gain or loss will be transferred to PL or OCI. Nalayak. Those who are saying PL means they have forgotten financial instrument chapter. If it is classified as equity, there is no subsequent measurement. How can you say PL? Once try to understand equity, there cannot be any subsequent measurement. There cannot be any subsequent measurement. Understood? So no subsequent measurement. If it is classified as equity, then there is no subsequent measurement. Understood? So those who are saying PL, hold your ears and say sir sorry. Bolo, say sir sorry. OCI. Oh, OCI. Gita Maha. Okay. Those who are saying PL OCI, they should hold the ears and say sorry to me. Everyone, right now say sorry. Because for if it is classified as equity, then there is no subsequent measurement. Arey bhai, that is financial asset. Who is Soumya Sri? Whatever you are saying, that is about financial asset. I am asking about financial liability equity. You are saying financial asset measured FBTOCI if equity instrument or FBTOCI if debt instrument. That is financial asset. Oh, full mixing. Soumya Sri, मजा आ रहा है ना? मजा आ रहा है सौम्या श्री? हाँ? Those you have said wrong, hold the ears and say sorry. Till I will receive all sorry, I will not proceed. Everyone said sorry. चलो ठीक है. Understood. No subsequent measurement. This can be asked in multiple choice question. But can you see this subsequent accounting? But then also this part is asked in exam. means normally they may ask in exam on the date of acquisition this is the fair value, subsequent measurement is, so what is the gain or loss? So if classified as equity, no subsequent measurement. If classified as financial liability, then it will be transferred to PL. Understood? Got this point? Yes sir. Now sometime what happen, we do payment to the equity shareholders who may be employee. Means there are two type of equity shareholders. One can be employee shareholders, one can be non-employee shareholders. One can be employee shareholders, one can be non-employee shareholders. Okay. Now, if the payment has been done to non-employee equity shareholders, it means that is always paid for PC and that will be always included in PC. Means payment to non-employee, there is no doubt. Payment to employee shareholders will be one doubt whether that payment is in the capacity of owner, whether the payment has been done in the capacity of employee. So whenever employee shareholders, first see whether it is a fixed payment without any condition. If fixed payment, then it is included in PC. But if it is contingent payment means if there is some condition, correct now. So if there is a contingent payment, doubt will come whether it is in the capacity of employee or whether it is in the capacity of honor. So what India says that if that contingent payment can be forfeited, if the employee terminate, it means it is in the capacity of employee. Then it will not be included in PC. But if the contingent payment cannot be forfeited, even though employee terminate, it means it is in the capacity of owner and that will be included in PC. Means if cannot be forfeited, included in PC. If forfeited, if employee leave, then not included in PC. Understood? चलेगा? Understood this much? Any doubt? Have you understood this contingent payment to employee shareholders? Which one you not understood? Which one you not understood? This one. Employee. What I am saying is shareholders can be of two types: employee shareholders, non-employee shareholders. So what do you mean by employee shareholders? Any employee who is holding equity shares of acquiring company, that is what employee shareholders now. Correct. So if you are doing payment to non-employee shareholders, then to no doubt it will be always included in PC. But whenever you are doing payment to employee shareholders, it is fixed payment, correct, then no doubt it is a part of PC only. But if it is contingent payment means there is some condition and that can be terminated if employee, sorry, that can be forfeited if the employee terminate. Means once employee leave the job, so that payment can be forfeited. Means it is in the capacity of what employee. Now suppose there is a condition that you need to remain in the employment for 5 years, and if you don't remain, will forfeit the payment. It means it is not a part of PC, it is a payment of employee benefit expenses, correct. Now so contingent payment, if it can be forfeited if employee leave the job, then not included in PC because it is a part of payment in the capacity of employee. But if it cannot be forfeited even though employee leave the job, means it is a payment in the capacity of owner and therefore included in PC. Very simple. I don't understand why you ask me that. Understood? Now understood? बोल रहे? Yes, sir. Now there are two special points. Any direct cost related to acquisition, means any cost of acquisition incurred by acquirer company will never be included in PC. That will be charged to PL account as an expense immediately. Recognized as an expense immediately. Any cost of issuing equity shares, suppose whatever equity share issued by acquirer company, there will be some cost of issuing equity shares, so that will be also not a part of PC. However, that will be accounted as per the requirement of Ind AS 32. Now this become a transaction cost. So transaction cost related to equity is deducted from equity as per the requirement of Ind AS 32. So any cost of issuing equity shares or any other securities will not be included in PC, accounted as per the requirement of Ind AS 32, means that will be deducted from equity, means that will be debited to retained earning. So this will be debited to retained earning and this will be transfer to PL account. Understood? This is very very important. Very very important. Till now not asked in exam, but from my point of view, this will be now included as a part of question, part of information in a question. Can be. However, this I think direct cost related to acquisition they have already asked. I don't remember, but this is not in asked. This can be also asked. So this will be debited to PL. This will debited to retained earning. Chalega. Understood? So this was your step number one, that is calculation of PC. Till now we were doing calculation of PC only. Have you understood calculation of PC? Calculation of PC means we are doing step number one. Calculation of PC, you understood? First try to understand the concept. Okay, once you understand concept, then only question become easy. Don't try to go into the questions. Okay, what happened, a student think that they will do the question solution hai maja aayega, I will read a solution and I am the champion, I can understand each solution, means I from solution I will understand concept, I am the Paramatma, I am the Mahatma, correct now, and they will read the question, they will understand solution, same question will come in exam and they will be defeated. So try to understand concept first. You can't understand any concept from solution. That is the that is the point where you are doing mistake. You read solution and you think that you will understand the entire chapter from solution because you have jadoo, jadoo, jadoo. Correct now? Am I right or not? Am I right? Most of the big chapter now you do with solution. Am I right or not? First answer me. First reply. Am I right or not? Chalo. Lack of practice to everyone. But there are few people who will understand the entire chapter from solution. Jadoo. Chal. Now, let me come to now Saaransh book. Let me see whether I have completed all the pointers or not. So I have completed this. Then separate transaction which is not a part of business combination. I have explained this. Direct cost of acquisition I have explained. Acha. Can I ask one question? This is one illustration given in ICS study matter. Very good question. I like this question personally. Sir, please finish class early. I want to go for marriage. Wow, 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 wow. Go for marriage then only. So why you are here in the class? Yes, sir, me also. Jadoo, jadoo, jadoo. Gajab. Means you started ordering me also. Gajab, gajab, gajab. Now, there is one question just try to understand. Suppose A Limited acquire B Limited. Okay? A Limited acquire B Limited and there is a land of B Limited whose carrying amount is 100 lakh and the fair value of the land is suppose 500 lakh. And we all know that even though I have not informed you, but all the assets and liability of acquiring company will be recognized in the balance sheet of acquire company at fair value. But just try to understand this land is in the name of B Limited. So it is to be transferred in the name of A Limited and therefore A Limited need to pay stamp duty of rupees 10 lakh. Understood? So A Limited need to pay stamp duty of 10 lakh on acquisition of this land. So how much stamp duty is paid by A Limited? Stamp duty paid by A Limited is 10 lakh on acquisition of this land because they need to transfer the name from B Limited to A Limited. My question to you, this 10 Limited will be capitalized to the cost price of land, or it will be charged to PL? It will be charged to PL. Another question: this stamp duty will be charged to PL, or it will be capitalized to the cost price of land? So those who are saying PL, it is 100% correct. Those who are saying it will be added to land, that is wrong. We are not applying Ind AS 16. We are applying Ind AS 103. As per Ind AS 16, land is initially measured cost, but it is at fair value. And can you change the fair value? No. Means now all the expenses incurred by acquirer will be charged to PL. Now there is a rule: any expenses incurred by A due to, that is the acquisition related cost, will be charged to PL. There is only one thumb rule. I hope you have understood now that. Now contingent consideration I have already explained. Contingent consideration, contingent payment to employee I have already explained. Correct. Now issue number 5, acquirer share based payment award, exchange for award held by acquirer, means replace share based payment award, I have explained. Correct. Now this also you can read, already I have explained. Now non-replace SBP award, just try to understand sometime what happened. This is not yet asked in exam, but can be asked in MCQs. Can be asked in MCQs. But sir, as like as per India 16. I mean, right now I'm teaching India 103. India 103 says land is initially recognized fair value. India 16 says land will be initially recognized cost price. Cost price, then stamp duty is a part of cost. But here it is at fair value. Understood? Got this point? Chalega? Can we move? Now there is one more point: non-replaced SBP award of acquiring company. Till now no question have been asked from this particular point, but can be important. Sometimes what happened, the SBP award of acquiring company is not replaced by SBP award of acquirer company. It can be a situation when acquiring company is not liquidated. Acquiring company is not liquidated, and of course, can I say, in case of formation of subsidiary, it can be a possible situation, because in that case subsidiary company is not liquidated. Subsidiary company is not liquidated. Now so can be asked in exam, till now not asked. Correct. So in this case what they said, whenever there is a non-replaced award, means SBP award of acquiring company is not replaced by the SBP award of acquirer company, then in that case, if already vested, means already that award has been vested on the date of acquisition, then entire fair value of that award on the date of acquisition will be classified as NCI. Will be classified as NCI, non-controlling interest, means it will not be included in PC. Then fair value of SBP award is classified as NCI. Why? Because just try to understand, in that case, can you say now to the employee, acquiring company will allot their own equity shares. So any equity of acquiring company which is not held by acquirer company is NCI only, and therefore it will be classified as NCI. But if it remain unvested, if it is not vested on date of acquisition, then it means there are two part. One is pre, one is post combination period. Pre combination period, it will be classified as NCI on the date of acquisition. It will be classified as NCI on the date of acquisition. Correct. It will be classified as NCI on the date of acquisition. Correct. But post combination period, it will be treated as EB expense and credited to NCI for the post combination period. Means in this case, how to calculate this amount? The formula remains same. What is the formula? Fair value of original award. Fair value of original award. The formula I think I have given. Fair value of acquiring award, means original award, multiplied by expired period, divided by modified vesting period. Means if it is modified, quite possible the plan has been modified. Modified vesting period or original vesting period, whichever is greater. Now not replaced vesting period. It is modified vesting period or original vesting period, whichever is greater. Understood? This is pre-combination period, and the balance will be recognized as an EB expense during post-combination period, but it will be credited to NCI. Means the journal entry during post-combination period will be EB expense to NCI. EB expense to NCI. Understood? Have you understood this part? Have you understood this part? Chalega? Can I move? There is one question given that you can do by your own. I will not explain. Have you understood this part? Understood. Okay. Then, okay, done. So PC is completed both from my handwritten notes and as well as what? Saransh book. Now coming to step number 2. Step number 2 is what? Calculation of fair value of INA, excluding goodwill, and calculation of deferred tax. So step number 2, in one working note we'll do two things. We'll calculate fair value of INA as well as what? We'll also calculate deferred tax. So can you say you will find out fair value? And can you say as per India's 12, now we know we want tax base of INA of acquiring company. So we want tax base of INA of acquiring company. So fair value and tax base, and the difference will be temporary difference. Chalega. So asset fair value is given. If the fair value of asset is not given, we'll assume carrying amount is equal to fair value. Liability, if the liability fair value is not given, we'll assume the carrying amount of liability is fair value. Correct. Now tax base will be given the question. Thank you very much. If not given, then it will be assumed to be equal to the carrying amount of INA of acquiring company. Got this point? That assumption already I have said in India's 12 last class only. So understood a tax base. If given the question, thank you very much. If not given, it will be assumed to be equal to the carrying amount of INA of acquiring company. Correct. So we'll find out fair value of INA and the tax base of INA. If fair value is more than tax base, then there is a taxable temporary difference on which we recognize DTL. If fair value is less than tax base, then there is a deductible temporary difference on which we recognize DTA. So can you say there can be DTL? DTL means what? Taxable temporary difference multiplied by rate of tax. If there is a DTA, so it will be deductible temporary difference multiply by rate of tax. So DTL will be deducted and DTA will be added in the INA. So this total will become the fair value of INA. Understood? Have you understood this? Any doubt? Have you understood this working note? In this way only you will do in exam. Have you understood this part? Right. So what assumption we have taken? If the fair value of INA is not given the question, assume equal to carrying amount of INA. If the tax base of INA is not given the question, then assume equal to carrying amount of INA of acquiring company. Of acquiring company. Chalega. Correct. Now there is one special point. There is one special point. And this is very interesting point. Very interesting point. Chalega. This point will be important when you are conceptually strong. If you are not conceptually strong, then this point is not at all important. Means try to understand, even though you don't know this point, it is quite possible you can do the question. But sometime when you become more conceptual, doubt will may come. So I need to clear this point right now. Listen carefully. Everyone listen carefully. I want full attention. I want full attention. Are you ready? Then only I will consider. Are you ready? But we'll take a 5 minute break. After 5 minute break, we will discuss this. Hello. Yes, sir. Everyone ready once again? Can we start? Sir, Jadu once again. That will come what when we are in that mode. I say it will not come. Okay. Chalo. Okay. Everyone, the special attention is required. I think everyone have taken the break. Now listen carefully. I want full concentration for this point. Once you will understand, then the doubt will never come. Okay. Now just try. I just want to ask one question. When we are calculating DTL and DTA, this is DTL and DTA of parent company, or this is the DTL and DTA of subsidiary company? Everyone. Because right now I said actually this is a question of what? Means what I want to say, parent company means what? Acquirer company, and subsidiary company means acquiring company. You can say in this way, the DTL and DTA of what? Acquirer company or acquiring company. It is acquiring company. Very good. It means, can you say we are recognizing DTL or DTA of acquiring company, which will be recognized in the financial statement of acquirer company. No, it is correct. It is as simple as this is asset and liability of acquiring company, which will be recognized in the financial statement of acquirer company. Now, my question to all of you, everyone, if suppose there is DTL already appearing in the balance sheet of acquiring company, so this liability will be inclusive of DTL ki exclusive of DTL. Means of course there may be some DTL which is already in the balance sheet of acquiring company. So this liability will be excluding that DTL or including that DTL. Excluding the DTL or including the DTL. I hope you are understanding. Suppose DTL is already appearing in the balance sheet of acquiring company. So my question to you all, this liability, whatever I have taken, this will be excluding. This will be excluding or including the DTL. Very good, excellent. This will be excluding. Very good, excellent. Means conceptually you are clear. This is excluding. Now come to from examination point of view. So whenever a questions come for DTA and DTL in exam in the full-fledged question of business combination, the first question you should ask is DTA or DTL is given in the balance sheet of acquiring company. Can you say if it is not given, means DTA or DTL is not given in the balance sheet of acquiring company, it means, can I say, there was no temporary difference in the balance sheet of acquiring company? If there is no temporary difference, it means, can I say, the can I say in this way, the carrying amount of INA and the tax base of INA of acquiring company is same? Can I say carrying amount of INA and the tax base of INA will be same? And therefore, in that type of question, they will never give you tax base because the carrying amount and tax base will be always same. Understood this point? So in this case, tax base of INA will be always equal to carrying amount of INA. And because of that reason, if DTA or DTL is not appearing in the balance of acquiring company, they will never give you the tax base of INA already appearing in the balance sheet of acquiring company because the tax base and carrying amount will be same. Have you understood this part? Have you understood this part? This part have you understood? Everyone respond yes, sir. Then only I will proceed. I don't want to be what fast in this. Have you understood this? So in this case, they will never give you tax base. Why? Because in this case, tax base and carrying amount will be always same. Correct. Now, if it is no, then you can easily calculate because already DTL is not appearing in the balance sheet or DTA is not appearing in the balance sheet. Apply this formula and मजा आ रहा है. Apply this formula and मजा आ रहा है. Understood? चलेगा? Yes, sir. Now, if yes, means if DT or DTL is given in the balance sheet, it means one thing is clear that tax base of INA of acquiring company and carrying amount of INA of acquiring company are not same. It means the tax base of INA is not equal to carrying amount of INA. It means can I say in this question the tax base of INA should be given the question. Tax base of INA should be given the question. So if the tax base of INA is given the question, thank you very much. And of course, can I say tax base of INA should be given? Because if DT and DTL is appearing in the balance sheet, so one thing is clear that tax base of INA and carrying amount of INA are not same. So we want tax base of INA of the tax base of INA which is already appearing in the balance sheet of acquiring company. I hope you understood. If the tax base of INA is given the question, thank you very much. Then what we'll do? We'll take all asset excluding DTA. We'll take all liability excluding DTL. Then we'll find out fair value and the tax base of INA excluding DTL and apply this formula. Then मजा आ रहा है. So in that case, this assets and liability means this INA should be excluding DT and DTL appearing in the balance sheet. Excluding DT and DTL appearing in the balance sheet. Have you understood this part? Have you understood this part? Bolo. If yes, sir, then only I will proceed. Have you understood this part? Is the voice okay? Is the voice okay or I should check it? Because someone is saying voice is cracking. So if many one will say, then only I will say okay, it is cracking. Otherwise, one person is cracking, so you only crack, other are not cracking. Voice is okay. So I hope now you understood. Means in this case, can you say in CBS, what we write down? The DTA or DTL of acquirer company plus or minus DTA or DTL of acquiring company as per working note. As per working note means will not consider DTA DTA already appearing in the balance sheet of acquiring company in CBS. Have you understood this part? Bolo. Correct? Have you understood this part? Everyone respond fast. So in CBS, we write on DT DTL of acquiring company plus minus. Plus minus means what? That we to set off. Correct now. DT DTL of acquiring company as per working note whatever we have calculated. As per working note whatever we have calculated. चलेगा? Understood? Yes, sir. Very good. Okay. Now, if I am saying yes, DT and DTA already appearing in the balance sheet of acquiring company, then you have understood that tax base of INA is not equal to carrying amount of INA. And suppose the tax base of INA is not given the question, so guys, the question is wrong. If the tax base of INA is not given the question is wrong now. We want tax base, but they have not given tax base. So in that case, we use one shortcut. This is a shortcut. Are you getting what I am saying? If the tax base of INA is not given in the question, but it is impossible. Why? Because the tax base of INA is not equal to carrying amount INA. So in that case, we can't assume that tax base of INA is equal to carrying amount of INA. Understood what I am saying? So in that case, what we'll do? We'll take all asset including DTA. We'll take all liability including DTL, then find out fair value and tax base including DT or DTL. Understood this part. So in this case, this is one shortcut from examination point of view, and ICI has also done the working out in this way, and this is shortcut. Ultimate your answer will be same. Ultimate your answer will be correct, but this is one shortcut. Shortcut is what? Asset including DTA, liability including DTL. This will be fair value and tax base of INA including deferred tax asset or liability. Understood this part? But in this case, in CBS, what do you write down? You write down DTA or DTL of acquirer company, correct? Plus DTA or DTL of acquiring company, both in the balance sheet of acquiring company plus working note, whatever you have calculated, so this will come in the balance sheet, this will come in the consolidated balance sheet. Understood? Have you understood this part? Have you understood this part? Means I have seen there is one question of this nature, they have given one question of this nature in exam, in ICS study material, and they have given one question of this nature. Till now they have not given any question of this nature, where arguing they have not given the question of this nature. But once this question will come now, everyone will suffer, because actually we should be excluding DDA, but in this question we have taken include DDA. Why? Because this is one shortcut. Have you understood this part? Have you understood this part? Bolo. Have you understood this part? Can I proceed? Now, special point for INA. Now listen all the special points for INA. INA we have understood. Now there are special point. Any contingent liability of acquiring company. Now any contingent liability of acquiring company, what Ind AS 103 says, that will be recognized in the financial statement of acquirer company if two conditions are satisfied. Means for that Ind AS 37 is not applicable. Ind AS 37 has given 3 conditions, but Ind AS 103 has given 2 conditions. So any contingent liability of acquiring company will be recognized in the financial statement of acquirer company if 2 conditions satisfied. There must be present obligation arising from past event and fair value can be estimated reliably. Means from examination point of view, if they have given contingent liability of acquiring company and fair value is given, that will be recognized as provision in the financial statement of acquirer company, even though it is not recognized in the financial statement of acquiring company. Understood this point? Very important point this. So it will be recognized in the financial statement of acquiring company as provision. Have you understood point number A? Point number A. Once you understood, just write down proceed. So once you understood, I'll proceed. Write down proceed. So I'll proceed. These are all special point. One mistake, can I say, your INA will be wrong, your INA is wrong, your goodwill is wrong, and can I say 40 marks question will become what? 4 marks question. So one mistake gone, khatam. Then second point is about non-current asset classified as held for sale. So what Ind AS 109 Ind AS 103 say that any non-current asset which is already classified as held for sale in the books of acquiring company will be measured as per the requirement of Ind AS 105. Now Ind AS 105 says that carrying amount or fair value less cost of disposal, whichever is lower. So it means it is not recognized as fair value, it is recognized as carrying amount or fair value less cost of disposal, whichever is lower. And can you see if Ind AS 105 already applied in the balance sheet of acquiring company, it means that carrying amount, because that carrying amount will be lower of that only. Understood? So recognize in the books of acquirer as per Ind AS 105, that is lower of these two will not be recognized as fair value. Fair value might be given, but it will not be recognized fair value, it will be recognized as carrying amount if that acquiring company has already applied Ind AS 105. Have you understood point number B? बोलो. Yes, sir. Now coming to point number C, cash and cash equivalent. Cash and cash equivalent can I say cannot be recognized as fair value because they do not have fair value. But sometimes to confuse you, they might give you the fair value of cash and cash equivalent. Can I say totally bakwas? It will be recognized at carrying amount. It is always recognized at carrying amount. It is always recognized at carrying amount. Understood? Chalega. Then point number D, indemnification asset. What do you mean by indemnification asset? Just try to understand. Whenever we have acquired some contingent liability of acquiring company. Now suppose we have acquired, means we have assumed the contingent liability of acquiring company at rupees 10 lakh. But can I say it is quite possible we need to pay more than 10 lakh because that is contingent liability. In that case, acquiring company may indemnify the losses because of that contingencies. Correct. So it means we have, because of that agreement, can I say acquirer company has a right to indemnify. So the right to indemnify, sorry, right for indemnification is will become an indemnification asset in the books of what? In the books of acquirer company. So whenever they have given some information about indemnification asset, we recognize indemnification asset at fair value, and trust me that fair value will be given the question because fair value we can't go and measure fair value now. So it will be recognized as fair value on the date of acquisition. However, this fair value should not exceed the fair value of liability assumed. Means this will be at fair value, but it will not exceed the fair value of liability assumed. It means if the fair value of liability assumed is 10 lakh and fair value of indemnification asset is 8 lakh, then recognize it 8 lakh. If the fair value of liability assumed is 10 lakh and if the fair value of indemnification asset is 12 lakh, then recognize that what? 10 lakh. Then recognize indemnification asset at 10 lakh. Understood? Have you understood? Have you understood indemnification asset? Indemnification asset you understood? Then next point is about in-house research and development project. Very important. In-house research and development project. What Ind AS 103 says that any intangible asset, means any intangible asset will be recognized in the balance sheet of, in the financial statement of acquirer company if it meet the definition of intangible asset, even though it does not meet recognition criteria. Means as per Ind AS 38, if you remember, both definition criteria and recognition criteria need to be satisfied. But Ind AS 103 says that intangible asset can be recognized if it meet only definition, if it meet only definition of intangible asset, even though it does not meet the recognition criteria. Understood this point? So can I say will meet the definition of intangible asset to any in-house research and development project of acquiring company? Can I say it is always an intangible asset because it is identifiable, non-monetary, without physical substance? So it will meet the definition. And if it meet the definition of intangible asset, can I say it can be recognized in the balance sheet of acquirer company, even though recognition criteria was not satisfied in the balance sheet of acquiring company, even though it was not recognized in the balance sheet of acquiring company. Got this point? So will be recognized at fair value in the balance sheet of acquirer company, even if not recognized in the books of acquiring company. Got this point? Correct. Subsequent accounting will be done as per the requirement of Ind AS 38. Subsequent accounting will be done as per the requirement of Ind AS 38. चलेगा. Correct. So if suppose there is a research project which was not recognized in the books of acquiring company and the fair value is 10 lakh, so it will be recognized in the balance sheet in the financial statement of acquirer company on the date of acquisition at rupees 10 lakh. Now subsequent accounting, suppose research phase expenditure is 2 lakh and development phase expenditure is 8 lakh, and let's say it meet the recognition criteria, so this will be charged to PL account as an expense because of Ind AS 38, but this will be capitalized. So what is the carrying amount of in-house research and development project? That will be 10 lakh plus 8 lakh, 18 lakh. Understood? Have you understood this much? Have you understood this part? Bolo. Got this point? Till now this point has not been asked in exam. Can we proceed? Can we proceed? Yes, sir. Then assembled skilled workforce. Assembled skilled workforce. Just try to understand. Whenever you acquire business, you will always acquire the skilled workforce of that company. Correct. Now, if are you getting, so you will also acquire the skilled workforce. The question is that can we recognize skilled workforce as an intangible asset? It will not meet the definition of intangible asset because it is not identifiable. It is not identifiable. Therefore, assembled skilled workforce cannot be recognized as an intangible asset in the books of acquired company. Will not meet the definition of intangible asset. Will not be recognized. चलेगा. Even if fair value is given, even if fair value is given in question, to confuse you now, they will give you that A limited means acquire company has paid 20 lakh for what? Assembled skill for. That is totally not relevant. Ignore it. Ignore it. Understood? Yes, sir. Then customer and subscriber list, just try to understand. We also acquire customer and subscriber list, so that will always meet the definition of intangible asset because that will be identifiable. That is actually an identifiable asset, and the customer and subscriber list will be recognized as an intangible asset. Correct. At fair value on the date of acquisition will be the definition of intangible asset, will be recognized at fair value, will be recognized at fair value. Understood? Then there is very important point about reacquired right. Reacquired right. Reacquired right. Correct now. Reacquired right means what? Reacquired right means what? Ki acquirer company has given a right to acquiring company to use their what trade name logo for their business. For example, if I say in this way, suppose there is one company A Limited and B Limited. Suppose A Limited is Haldiram. So Haldiram will give franchisee to be limited, and this franchisee has been given for 10 years for rupees 20 lakh. So can you say this will become an intangible asset in the books of B Limited, and they will amortize it for 10 years. Understood? For A Limited it is revenue, and Ind AS 115 will be applicable. So I am not discussing about the accounting treatment of this franchisee fee. Okay, na? Now just try to understand. Suppose 6 years has been expired, and this will come in the books of B Limited at amortized value. That is 20, and 6 years has been expired. So 4 divided by 10. So can you say it will come in the balance sheet at 8 lakh after amortization? After amortization. But what happened after 6 years? A Limited absorb B Limited. Now A Limited absorb B Limited. So when A Limited will absorb B Limited, one doubt will come. They will acquire all assets and liability. All assets and liability will be acquired at fair value. The question is that whether this right which was given by A Limited to B Limited is reacquired. Is reacquired now? Reacquired or not? So this is known as reacquired right. Are you getting? So whether this reacquired right means this is the right of A Limited given to B Limited, now reacquired by A Limited, whether it can be recognized in the financial statement of A Limited. So whether it will be recognized, what is your answer? Yes or no? Whether this reacquired right will be recognized or not? Bolo. The question is that reacquired right will be recognized in the financial statement of A or not? Recognize. Someone is saying no also. No, it will be recognized. Because can you say, just try to understand why A Limited has acquired B Limited? Because of this right only. Because B is making huge profit because of this right. Now A want to make huge profit from their own right, and because of that reason it was acquired. It means there is some future economic benefit, and it will meet a definition of intangible asset. Therefore, it will be recognized at fair value, at current fair value. Suppose the current fair value is 20 lakh. No, 20 lakh. Suppose the current fair value is 25 lakh. So can you say it will be recognized at fair value? It will be recognized at fair value. If you are saying not recognized, it is not correct. So reacquired right will be recognized in the financial statement of A Limited at fair value. Correct. But what India's 103 says that this is there may be a, a there may be a settlement clause, means there may be some what cancellation clause. Cancellation clause means what? If suppose before 10 years this right is cancelled, so A need to pay some compensation to B Limited. I hope you are understanding. Now just try to understand in this case, if A Limited is acquiring B Limited, so that is cancelled. Automatically the right is cancelled. So what India's 103 said, there may be some that there may be some settlement price paid, which is actually a transaction which is not a part of business combination transaction, and therefore you need to also find out gain or loss on settlement, and that gain or loss on settlement will be accounted separately because it is not a part of business combination transaction. Understood? Now how to calculate gain or loss on settlement? So what India's 103 says that gain or loss on settlement will be lower off, will be lower off. Understood? Gain or loss on settlement will be lower off. Point number A, fair value minus carrying amount. Fair value minus carrying amount. So fair value I have given 25 lakh. Carrying amount I have given 8 lakh. Correct. So 25 minus 8, how much? 25 minus 8 is equal to 70. And suppose settlement price paid, that will be given the question. Settlement price paid, that will be given the question. Suppose it is 10 lakh. So this become lower and this will become loss on settlement. This will become loss on settlement. Understood? Have you understood? Are you getting what I am saying? Chalega. It means if the lower is negative, if it is positive. If the lower is positive, it means loss. If the lower is negative, then it means gain. So how it can be negative? It can be negative if the fair value is less than carrying amount. If the fair value is less than carrying amount, of course A will be negative and that will be lower, that become gain. So they can be gain, they can be loss. They can be gain, they can be loss. So if the lower is negative, it become gain. If the lower is positive, it become loss. Understood? So that will be separated from purchase consideration because it is a separate transaction. Correct now. So whatever you have calculated PC whatever you have created, calculated, from that loss will be deducted and gain will be added. And this will be PC for business combination. This will be PC for business combination. Understood? Correct? Till now this point has not been asked in exam, but there is one illustration given which can be anytime asked in exam. Just try to understand what I am saying right now. Whatever question they are giving for business combination, that is super easy, and that is already whatever is they have given in ICS study material. But once they start crafting new question, that can be dangerous. But have you understood this point? Correct. So let us read. It will be recognized as an intangible asset at fair value on the date of acquisition. Subsequently will be amortized during the remaining contractual period. Of course, that intangible asset, whatever you recognize, will be amortized during the remaining contractual period. As in our example, remaining contractual period was 4 years, it will be amortized in 4 years. Gain or loss on settlement will be adjusted with PC as a separate transaction. It will be lower of carrying amount minus fair value. Carrying amount minus fair value, it will be fair value minus carrying amount. My mistake. Fair value minus carrying amount, fair value minus carrying amount, or settlement price paid. If this is plus, lower is plus, then loss. If it is minus, then gain. Correct? Then PC will be adjusted. Agreed PC minus loss on settlement plus gain on settlement. This become PC. Chalega. There is one question. Let us do that question. Let us do that question. There is only one question we have of this nature. What was the question? Yeah. This is the question. Question number 3. ABC Limited acquired PQI Limited for a consideration of 1 crore. This become PC. 4 years ago, ABC Limited had granted a 10-year license allowing PQI to operate in Europe. The cost of license was 2,50,000 4 years ago. It was acquired. The contract will allow either party to terminate a franchisee at a cost of unexpired initial fee plus 20%. Means if this is cancelled, then the cancellation fee will be unexpired initial fee plus 20%. So at the date of acquisition, the settlement amount, the unexpired period is 6 years because it was given for how many years? 10 years. So 6 years will be how much? This 2,50,000 into 6 by 10. So 2,50,000 into 6 divided by 10 is equal to 1,50,000. Now 1,50,000 plus 20% means 30,000 to 1,80,000. So can you say even though not given, we can calculate it. So 1,80,000 can be calculated. This is settlement price paid. ABC Limited has acquired PQLM because it sees high potential in European market and wishes to exploit it. ABC Limited calculated under current economic condition and current price, it could give grant 6-year franchisee for a price of 4,50,000. Means this is fair value. Fair value at current market terms is what given. So it is fair value. How the license will be accounted? So can I say first we need to find out what is the fair value. Fair value is 4,50,000. Can I say this will be included in INA at fair value? So this reacquired right will be recognized in the financial statement of acquirer at 4,50,000. We will also calculate gain or loss. So gain or loss on settlement will be what? First is what? The formula is what? Fair value minus carrying amount. What is the fair value? Fair value is given 4,50,000 and carrying amount we can calculate, and carrying amount already we calculated, that is 1,50,000. So minus 1,50,000 minus 1,50,000. So first one is 3 lakh and the settlement price paid is 1,80,000. Whichever is lower, so it means there is a loss of 1,80,000 and the PC was 1 crore and the loss is 1,80,000. The PC for business combination will be 1 crore minus 1,80,000 means how much it will be? It will be how much? 9. It means how much? 98 lakh 20,000. So 1 crore minus 1,80,000 will be 98 lakh 20,000. That will be PC for business combination. PC for business combination. Understood? Have you understood? This part have you understood? Now suppose, let's say INA, I'm just explaining, INA other than reacquired right, suppose to explain the journal entry, INA other than reacquired right, let's say is 90 lakh. 90 lakh. Okay. INA other than reacquired right is 90 lakh. So what will be journal entry? Batao. So INA account debit 90 lakh, this is the fair value I have given. Reacquired right will be recognized at 4.5 lakh. To PC payable. To PC payable. Correct. So PC payable for business combination is how much? PC payable for business combination is how much? Can I say it is 98.20? So how much goodwill? Goodwill will be at 98.2 minus 90 minus 4.5. So it becomes 3.7. So this become goodwill. And there is one loss on settlement that will be transferred to PL 1.80. To payable it is 1.80 and total amount paid is what? 1 crore. Understood? You can combine this to journal entry, compound this to journal entry. Understood? Have you understood this part? Bolo. Any doubt? Have you understood this part? This journal entry is very important. So this loss on settlement will be transferred to PL. Till now not asked in exam, can be asked in exam. What happened? Everyone is understanding at one time only. Is what happened? Now there is the last point about lease. Lease also not in asked in exam nor given in any question, but can be given. I always say this can be given. So if lease is given and the acquiring company is a lessee, acquiring company lessee means acquiring company is lessee means they have taken some asset from any other party. So can you say they have already applied Ind AS 116? They have already applied Ind AS 116. Means I'm not saying that acquirer is a lessor and acquirer is lessee. Means acquiring company is lessee in a different transaction. In a different transaction. Understood? Means there is no relationship between the acquirer and acquiring as a lessee and lessor. Okay. Then in that case, we will first ask one question: is the lease a short-term lease or lease of low value asset on the date of acquisition? On the date of acquisition means on the date of acquisition, if the lease term is 12 months or less than 12 months, it will become short-term lease. Correct? Now in that case, no treatment on the date of acquisition because there will be no ROU asset, no lease liability. Means no treatment means neither ROU asset will be recognized nor lease liability will be recognized in the books of acquirer company. In the books of acquirer company. Okay. Now if I am saying yes, sorry, no, it is not a short-term lease or it is a lease of low value asset, then what Ind AS 103 say that we recognize ROU asset and lease liability at present value of remaining lease payment at whatever discount rate is given. Discount rate will be given the question to recognize ROU asset and lease liability at present value of remaining lease payment on the date of acquisition. On the date of acquisition. So can you say we can find out the lease liability will be liability and ROU asset will be asset in the INA. So are you getting? So in INA we'll consider ROU asset at this amount, lease liability at this amount. Understood this part? Ah. If the acquiring company is a lesser, if the acquiring company is lesser, now it can be two situations. Either the lease is an operating lease or finance lease. If the lease is an operating lease, then recognize the underlying asset at fair value. At fair value. At fair value. Correct. But if it is a finance lease, so can you say already a lease receivable is coming? Then we recognize lease receivable at present value of remaining lease payment on the date of acquisition. Recognize lease receivable at present value of remaining lease payment on the date of acquisition. However, they will not ask this. They will ask, if they ask, they will ask this only in exam. Have you understood lease also? All the points of INA completed. All the points of INA completed. Have you understood? Chalega. This was step number 2 completed. Till now we are in step number 2. First step number 1 calculation of PC. Step number 2 INA and DT calculation. Now come to step number 3 measurement of NCI. Only it will arise in case of formation of subsidiary company. Formation of subsidiary company. So now NCI is measured by using two methods. One is known as fair value method. Other is known as proportionate share in INA method. I hope you all know about this. Correct? I will miss in this. I will not do detailed discussion because I know you all know about this. So NCA is measured by using two methods, either fair value method or proportionate share in INA method. Now fair value method means what? We'll find out a fair value of NCI. First we'll find out number of equity shares acquired not acquired by parent company, not acquired or not held by parent company, multiply by fair value of equity shares of acquiring company. Fair value of equity shares of acquiring company. Of course, you can find out. This fair value will be given. This you can find out because if 70% acquired, so 30% not acquired, you can easily find out. But suppose the fair value of equity share of subsidiary company is not given, then you don't have any other option. In that case, we'll apply proportionate share in INA method. So we'll first find out fair value of INA already calculated in step number 2. So fair value of INA multiply by share of NCI. So fair value of INA on the date of acquisition multiply by share of NCI. Understood? Correct? Understood? Now this fair value of INA on the date of acquisition will be after calculation of DT or before calculation of DT? Batao. This fair value of INA on the date of acquisition will be after calculation of DT or before calculation of DT? Deferred tax asset or liability? Batao. Here also you can do mistake, therefore I am asking. After, very good, excellent. After calculation of deferred tax, very good. Then step number 4 is what? There can be some step acquisition. Step acquisition means what? 20% acquired initially, then 40% acquired. So that becomes step acquisition because ultimately the control is obtained. So whatever acquired previously, that is known as previously held equity interest. What India's 103 says that any previously held equity interest will be measured at fair value on the date of acquisition. On the date of acquisition. So can you see, we'll find out fair value of previously held equity interest. There is number of equity shares acquired by acquirer company, means parent company, before the date of acquisition, multiply by fair value of equity shares of subsidiary company. That will be given the question. So this is the fair value of previously held equity interest. Now we'll compare with the carrying amount of that previously held equity interest. So of course that carrying amount will be given the question. Carrying amount will be given the question, that is appearing in the balance sheet. So this become the remeasurement gain loss. Normally, the remeasurement gain loss can be transferred to PL or OCI as the case may be. Means if previously held equity interest, that investment in equity share measured FBTPL, then it will transfer to PL. If it is measured FBTUCI, then transfer to OCI. But if the question is silent, always it will be transferred to PL. Always it will be transferred to PL. Understood? Have you understood this part? Step number 4 you understood? Everyone? In case of reacquired right, when it is negative, that is gain. Do we have to ignore negative and see only the amount to see which is lower? No, 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 no. I have not said absolute. Lower, if lower is coming, so that is, if negative is coming, that will become lower. Take lower, take lower. If negative is coming, so that will become lower. Understood? Your doubt? I have not said take an absolute amount now. So listen carefully. I am only saying lower can be negative. Lower can be negative. Understood. This also understood. Then step number 5, the last step, calculation of goodwill or gain on bargain purchase. This to everyone know. First we'll take fair value of consideration paid. This was step number 1. Then fair value of previously held equity interest. This was step number 4. Then value of NCI. This was step number 3. Then this is the total. Then minus fair value of INA on the date of acquisition. This was step number 2. Correct now. This will be goodwill or gain on bargain purchase. Goodwill, if positive, gain on bargain purchase. If negative, gain on bargain purchase will be ultimately transferred to capital reserve. Understood? Then what will be the accounting treatment? This accounting treatment, listen carefully. However, in exam you will not pass the accounting treatment. You will directly prepare the balance sheet. But listen carefully. Can you say all asset will come at fair value? Recognize at fair value. If the fair value is not given, then recognize at carrying amount. Okay? Then any indemnification asset will be recognized at fair value. Any in-house research and development project will be recognized at fair value. Any customer and subscriber list will be recognized at fair value. Any reacquired right will be recognized at fair value. Due to reacquired right, there can be loss on settlement that will be transferred to PL. There can be gain on settlement. There can be some gain on settlement. Okay. If gain on settlement, then it will be credited. I have not written, but there can be some gain on settlement also. Normally, there will be loss on settlement. Understood this point? Correct? Understood? Correct. Then there can be some non-current asset held for sale that will be at carrying amount of fair value less cost of disposal, which will lower. Normally, it is at carrying amount because it is they have already applied Ind AS 105. They have already applied Ind AS 105. ROE asset at present value of lease. Sorry. ROE asset at present value of remaining lease payment. Correct. Cash and cash equivalent at carrying amount. Cash and cash equivalent at carrying amount. DTA as per working note. DTA as per working note. Already I have explained DTA. Goodwill as per working note. Goodwill as per working note. Correct. There can be some remeasurement gain and loss of previously held equity interest. So there is a remeasurement loss that is debited working note as per working note. Have you understood this part? Out of this now, this might not be given in the balance sheet of acquiring company. This might not be given. This is not recognized in the balance sheet of acquiring company. So these are the special item given as an additional information. So be careful about this point. Correct now. Indemnification asset, in-house research and development, customer and subscriber is reacquired right. Correct now. These all are special point. This might not be given in the balance sheet of acquiring company. This will be given as an additional information. Chalega. Any doubt in the asset side? Have you understood asset side? Have you understood asset side? Yes, sir. Now coming to liability side, so can to all liability at fair value. If the fair value is not given, then at carrying amount. Correct. Then there can be provision, means contingent liability assumed. So contingent liability assumed will be at fair value. Then to DTL as per working note, to NCI as per working note. To NCI will come only in case of formation of subsidiary company. To investment in equity shares, can I say at carrying amount? Because that will be de-recognized. Investment in previously held equity interest, that will be de-recognized. There can be some remeasurement gain of that investment, that will be as per working note. Correct? Understood. This up to this, any doubt in this provision? Be careful. Provision, be careful, because that may not be given in the balance to acquiring company. That will be given as an additional information. Correct? Up to this. Now this is the part of purchase consideration. This is all purchase consideration. Now purchase consideration can be paid in cash or bank. Means they can be cash payment. It can be by allotment of equity share to equity share capital, but this will come at nominal value. The difference will be securities premium. Be careful at this part, because we need to find out nominal value and then securities premium. Then it can be deferred liability if there is a deferred consideration. Then there can be contingent consideration, contingent consideration. Then there can be SBP reserve. SBP reserve is what? That is fair value of replaced SBP award attributable to pre-combination period which was included in PC. That is SBP reserve. Understood? Chalega. This any doubt? Now have you understood the difference of this journal entry? Will be goodwill, means they can be gain on bargain purchase, capital reserve. This is a part of working note. Have you understood this? Means if you understood this journal entry, only one journal entry, then you can easily prepare balance sheet. Only this journal entry to incorporate in the balance sheet of acquirer company. If you can incorporate, the balance sheet will 100%, it will tally. TBS will tell you now if you know this journal entry. Chalega. Have you understood the PC part? PC part. Ah. Have you understood this much? If you have understood, then I will need to explain only one point. Any doubt? If any doubt, ask me. Today the only concept, only one concept done. Now this contingent consideration, if classified as financial liability, now then it will be provision. Then in the balance sheet it will be shown under the head non-current liability, under the head provision. Correct? But if it is equity, classified as equity, then it will be shown under other equity. Then it will be shown under other equity in the financial statement of acquirer company. Correct? Deferred liability will be shown as a borrowing, in the financial liability. Of course, non-current liability payable after 1 year. If payable within 1 year, then current liability. Understood? But it will be shown as a financial liability under borrowing. As a financial liability under borrowing. Chalega. Understood? Done. Then balance sheet, I have just given the format. What will be added, what will not be added, that you can understand by now. Chalega. This you just read with this particular handwritten note. I think in this no doubt. Means book value of acquirer company. Then what will take about acquiring company, that you can understand. PC repeats, sir. I said PC. PC is based on the information. Means it will not be all. Means if there is a cash and bank payment, we run to cash or bank. If PC is in the form of equity share issued, then to equity share capital, to securities premium. If PC is in the form of deferred consideration, then to deferred liability. If PC is in the form of contingent consideration, then to contingent consideration. If it is classified as financial liability, then we call it to provision for contingent consideration. With equity, then we add on to contingent consideration bracket में equity चलेगा. To SBP reserve for replace SBP award attributable to pre-combination period. Already we have done the working note. Understood this entire part? Have you understood? Today we have done only one part, but majority of concept we have done. Majority of the concept we have done. Just come to India's Saaransh book. You can see we have done this step number 4. Intangible asset we have done. Contingent liability we have done. Indemnification asset we have done. Non-current asset held for sale of acquired lease we have done. Assembled workforce we have done. Customer and subscriber lists we have done. In process research and development. Reacquired right. Correct. Calculation of DT and DTL. Measurement of NCI. Goodwill recognition. Gain on bargain purchase. Step acquisition also I have done. Everything we have done. Step acquisition there is one point left that of course is required. Up to this, any doubt? This journal entry also I have explained. Any doubt? Tell about unrecorded asset of acquiring company. That is the only I have said that there can be some indemnification asset. Jan 2026. What unrecorded asset? What unrecorded asset? If there is any unrecorded asset, that will be also recognized at fair value. Okay, understood now? So because unrecorded asset means there is an error. So if suppose there is unrecorded asset of acquiring company, that will be also taken over. That will be recognized at fair value. Simple. What to say about that? I don't think since Jan 2026 they have given any unrecorded asset. What was that point? Jan 2026, what you are asking? Sub provision contingent liability once more. What once more, Ray? What once more? I said this contingent consideration you understood now. As a contingent liability you are asking. Already I explained now, any contingent liability of acquiring company will be recognized in the financial statement of acquiring company if the fair value is given in the question. If the fair value is not given in the question, then don't recognize. Understood? If fair value is given, recognize it. So that will become provision. So that provision will come to provision. But that is not given in the balance sheet of acquiring company. That is an additional liability. Correct? It will come at fair value. What more? Understood now? Research and development concept I have said now, Ray. Everything I have explained, Ray. Everything I have explained. Then also you are asking, Ray. Now what is your job? You will do one question with my technique. With my technique. Understood now? In the order, in the way I have done. One question you will do by your own. What is that question number? That is already a question of exam. This question you will do by your own. I say better you do two questions. We'll save our time. If we don't have any doubt, then we'll not do na. Correct now, because that two a big question. It will take, if I will take now, it will take more time. And now you can do it. 100% you can do it. So what is 22? This you do by your own. And one is one recent exam question was there, that also you do now. Okay. Similar question was there. Both the question you do for practice. This was the question. Similar question. This question also you do. There's some point which is not given. 44 also you do. And trust me, if you have understood, you can do it by your own. Trust me, in this only one point, if you want, I can explain right now. This point number A, what they have given. A Limited agreed to pay. A Limited means acquire company, agreed to pay an additional payment as consideration that is higher of 35 lakh and 25% of any excess profit in the first year after acquisition over its profit in the preceding 1 year made by B Limited. Means what they are saying, they will pay A higher of 35 lakh, B 25% of surplus profit whichever is higher. Means can I say whichever is higher? Means in any case they will pay 35 lakh. Means suppose case number 1, this is 35, this is 20, this is 35, this is 35, and this is 35, this is 45. In any case, can I say they are paying what, 35 lakh? This 35 lakh become deferred consideration. Understood? But can I say in this case it is quite possible the payment can be more than 35. So there can be additional payment which is right now contingent. So there are two considerations. One is what? Deferred consideration. One is what? Contingent consideration. Deferred consideration is 35 lakh. So 35 lakh will be paid. Now this additional amount would be due after 2 years. So after 2 years, we will do discounting for 2 years. B Limited has earned 10 lakh profit in the preceding year and expect to earn another 20 lakh. So just try to understand, has earned 10 lakh and expect to earn 20 lakh. So it means the surplus is only 10 lakh. 10 lakh ka 25% is how much? 2.5. That is less than 35 lakh. Means can I say the contingent consideration is not probable? Whenever contingent consideration is not probable and the information is not given, we'll assume it nil. Means in this case contingent consideration is not given, then contingent consideration will be assumed to be nil. Means the fair value of contingent consideration will be assumed to be nil. Now from examination point of view, try to understand. From examination point of view, what about contingent consideration? This point have you understood? I mean right now whatever I have explained, have you understood this point? Bolo. The 35 lakh and this, have you understood or not? Correct. That was the only point which you require my help. I think apart from that you can do by your own. Have you understood that part? Now about contingent consideration, listen. Measurement of contingent consideration on the date of acquisition. If the fair value of contingent consideration given in question, then recognize contingent consideration fair value, because in the last question the fair value of contingent consideration was not given. Therefore this case will not arise. But suppose given, then we'll not think about probable, not probable. Whatever fair value is given, that will be fair value on the date of acquisition, even though not probable. Understood? But if the fair value of contingent consideration is not given in the question and the settlement is not probable, then the fair value of contingent consideration will be nil, as we have done in this question. Correct? Yes, sir. But if the settlement is probable, suppose it is probable, then what will do? Calculate fair value of contingent consideration as per the probability given the question. Means of course then they will give some information and based on that probability will calculate what? Contingent consideration fair value. Understood? So as per the information given the question will calculate. Understood this point? Correct. Means this is entirely from examination point of view, because we are not here to measure fair value. But suppose fair value is not given and settlement is probable. Correct now? Are you getting what I am saying? So suppose in the given question they say 80% it is probable. So what will do? We'll first find out that payment multiply by 80%, that will become what? Fair value of contingent consideration. Understood? Got this point? Correct. This is also very important for measurement of contingent consideration on the date of acquisition. चलेगा. That two question you do today, this much only. I am also tired. I think you are also tired because heavy concept we have done. But have you understood each and every point or not? Just reply fast. Means all the points which you were not knowing, whether it is cleared or not. Inform me fast. So if you have liked everything, so do like the videos also, right? Sometime comment also. मजा आता है. Okay. Thank you very much. Jai Jinendra. Jai Hind. All the best. Okay. We'll meet tomorrow.